All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. It is 9 a.m. Eastern Standard Time, August 23, 2022. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking the time out of your day to join me today and every morning, 9 a.m. Eastern Standard Time. Let's go ahead and get started with the markets. Bottom right-hand corner of your screen, little black logo. Click on that. Turn on notifications, subscribe to our channel. Make sure to like our videos. Really do appreciate it as always. Takes a second out of your day just to click that thumbs up button for me. Let's go ahead and get started. Let's go and expand this chart here to make life easy. Dow futures down 39 points, NASDAQ down 0.17%, S&P down 0.13%, so basically pretty flat. Russell 2000 futures flat but green. Crude oil bouncing around like a penny stock with volatility last couple of hours or overnight and yesterday. Excuse me. Crude oil is up 1.75% this morning, 91.95 a barrel. Gasoline futures are down 0.23%, $2.67 a gallon, and looks like more reprieve at the pump, which is good news for U.S. consumers. Gold futures are flat, 17.49. Silver futures 18.72. That's down nearly 1%. Let's go and take a look at the euro dollar. They are still below a dollar parity, 99.20. And we have the dollar again, 137.47. That is flat as well. Bitcoin is up today, 21,310 on the future side, 1606 for Ethereum, up 2.65%. Let's take a look here at the VIX. VIX is up about 0.5%. We still have a gap to fill here around 2061, so watching that pretty carefully. In terms of what we're looking for in the VIX, really that 200-day moving average is 2468. Let's see if we reject that. Remember, we have that trend line. We do have that gap to fill here at 2127. We did break above the 20-day on the daily, so more than likely, we'll probably tap this 200-day and see where we go from there as the moving averages are getting very, very close to each other. The dollar index is flat. That's pretty much real reason why the markets are flat. We were higher overnight. Taking a look here, make sure to bring this up here. This is a multi-year chart, a multi-decade chart here on the dollar, and we're getting very close to that resistance. So 110 is that level. We better reject that. If not, we're going to go to 114.67, and that'll bring stock markets lower. If you guys remember, we talked about this big run. Again, we just have to see what we get continuing moving forward. Was it time to buy as we were going up? No, of course not. We'll wait and see if we get some opportunities. As of right now, you just have to play puts for now, and we'll go over the charts together. 10-year yields, again, above 3%. I have a small Fibonacci level. That's the daily. And again, we do have that inverse head and shoulders where, the head and shoulders are where we fell. Now we're testing that shoulder line, let's just say. 32.48 is your resistance. There is a gap to fill here at 28.93. That should fill probably this week. I don't think we're going to be red all week, but if you remember, I said that we would tap around 4,100 or so for the end of the week. We're pretty close to that. Back to S&P futures. We'll bring up a 4-hour chart to give us a little more clarity. And again, it's still that megaphone formation and it's still holding up. So the question is, do we hold that megaphone formation or that trend line? And if we do, here's the level we're looking for. 41.15. 41.15. I sent a video out to our members last night, and I sent out the watch list. My apologies for being late for Premium and Masterclass. I went over all this, and we're still watching key levels of support. Nothing has really broken, at least in terms of major support. So again, it's no need to rush into anything. We did catch SPY yesterday. It got as high as 50%. We took it for 40. I still have a runner, and I still have futures short running. So again, no need to really rush into much. Again, you could see the volume is weak. So again, there's no need to pay premium just to hold something, just because you want to trade something. So again, best to just wait it out and see where we at if we break 41.15. Let's go and take a look at crude oil quickly. Crude oil, again, really volatile, really because of the Saudis. In terms of where the market is heading, again, all we have broken is above the 20-day. Again, a good sign for oil. If we start getting above 95, then I want to start taking a look at possibly looking at some energy stocks. Remember, I was looking for that 85 level. Boy, did we get close. We got around 85.71. The market's not exactly perfect based on analysis, but again, maybe above 95, we could start taking a look at at least some oil calls. If not, possibly take a look at some oil stocks to buy. No, not Oxy. Sorry, Warren, that's all yours. That's Warren Buffett stock. I'll take a look at some Chevron because I'll go ahead and add some more. But again, we're going to go ahead and see if we could break that 200-day of 95.09. And if we do, then I would like to play at least calls. Give us a little bit of time on some XLE, some XOM or CVX if we have the decent enough volume to go long. If we're looking for a turnaround, a couple of tickers that I want you guys to look at is really IWM, but we may be running out a little bit of room. We do have a gap to fill to 94, 93, 91. That may be worth a shot. If you look at the hourly, you could see that we have another little bit of support here at 188. So a break of 190, I may just kind of scalp IWM with volume to 188 if we get a shot. But again, I'm not salivating over anything today. I'm pretty happy that we got one yesterday. We're on a little bit of a winning streak. 6 days in a row, we have closed a winning trade. I want to see if we can maybe get that to 7 days. If we don't, that's fine. But again, it's nice to have statistics, especially if you're like a big sports geek like me, kind of like a hitting streak or so. But the most important thing here, guys, is that don't force anything. There's no need to go crazy, 5 trades or anything like that. It's just there's not enough volume. And the problem is that it's going to eat your spreads, the bid and the ask. It's going to just slow roll in general, and you're just going to be wasting premium, and it's just not worth it. So again, tactical. Take it easy. Let's see what we get moving forward. Let's go ahead and answer some questions. Rashil's asking about thoughts on nat gas. Nat gas really is based on Europe now with the Nord Stream pipeline. Natural gas on the future side is flat today, but if you could see on the daily, it's very volatile. I mean, you went from 9.5 to 5.5 to 9.5. It's an energy crisis, pure and simple. That's not going to change until Russia pulls out of Ukraine or we start giving a ton of natural gas to Europe and Germany and England and everyone else. So just like we had with the oil prices, they're going to come back down. So would I want to be long natural gas here? Not really. I would actually want to be short, if anything, but I wouldn't want to trade it. But again, we've seen these manias before, guys. Natural gas, just like crude oil, look familiar, and you could see just straight down since. And again, guys, these manias come back down. It doesn't mean natural gas cannot go higher. Of course it can. But again, my contention is I'm looking for a reversal of anything. We're right here, right at this key resistance of 994, and we rejected it. So again, I may see us going back a little lower, maybe it's around 8.5, 7.5. Would I want to trade that? No, I'm good. I'm good. I'm good trading those. Those are monthly contracts. I want to buy quarterlies of anything. Life of Mid says, a life omen? What's been the key of your win streak? Really, the key, if I could be completely honest, is really patience. Is just going step by step, not just doing 3 trades, 3 calls, 3 puts. It's just with this environment, just going one by one, step by step. You know, if we see 30%, we're telling our clients, we're letting them know, hey, we're at 30%. You don't have to be married to the 40% rule. You don't have to shoot for the moon, especially with this volume. If you're looking for like big returns, I guess, if you like those triple baggers, that's probably not going to happen till Labor Day, or if you catch something overnight for the most part. It's just the volume's not there. So really the key is patience and sticking to your plan, sticking to your alerts, sticking to your watch list like we send out every week. And again, guys, a lot of it has to do with just timing. People say luck. Luck is preparation meeting opportunity. We're prepared every morning with our team. Opportunity comes, we take advantage of it. If we can call it luck, so be it. But at the end of the day, if you have preparedness and you're reading the markets and you know what's happening, again, it's easy to read a chart, but again, knowing why things are moving, knowing why the dollar matters, bonds matter, the VIX matters, commodities matter. Those things are very important to understand if you want to be a well-rounded trader and investor, and if you really want to do this with your life, because this will take a lot of your time. This will take a lot out of you because just like anything else, it takes time to master. The stock market is not some incredible black hole where you just don't know anything about. It takes time. You just got to learn it. If you want to learn the piano, you got to learn the piano. You got to get some time on the keyboard. If you want to learn the market, you got to get screen time. That's pretty much it. The best key I can give you guys. So again, pretty quiet. Again, if you're taking the week off this week, not a bad time to do so. I will be watching the market as always. I love doing this stuff. I love reading the macro. I love reading the markets. But again, I'm not expecting much for the most part. Let's see if we do break that support level of around, what did I have that support level here? Around 41.14, 41.15. If we do break, then we can see what we can do. If not, I, to be completely honest, I think we're going to bounce off this level here. Very key level of support. You had the support here for about 2 weeks ago. You got this trend line higher. If you look at the 4-hour chart, you could see that, hey, this isn't really bearish. It's still relatively bullish. I mean, if you go from the last 20 days, we're above the 20. This is a 4-hour chart. So I think this is a 60-day chart. So the last 60 days or 45 days, we have been grinding higher. Does that mean that we should go out and buy the market here? No. In terms of the dip, get me to around 4,000, 3,900. We could talk about buying some more stocks, which would be nice. But Dow and the S&P are at 2-week lows. So again, lower volume. We had such a great bull run the last 5 weeks. So again, it is normal for buyers to have at least some exhaustion and volume to go down towards the end of August. And seasonality speaking, guys, end of August is relatively weak, usually. So this is nothing new. So we'll just go ahead and play day by day. To me, every day is a new market. So we'll see where we go from there. We do got those SPY runners. Let's see where we go. Still got those futures contracts running. Let's see where we go. Crude oil is starting to bid a little bit, up 2% to the Saudis, of course. The Saudis saying they're going to cut production if the futures market is still broken. 95. It wasn't broken when we were at 130 a barrel oil, obviously, but we know the drill. Have a great rest of your afternoon. I will catch you guys on Instagram for the recap as I send out every day. And Discord team, I will catch you guys for the recap after the day. YouTubers, I'll catch you tomorrow, 9 a.m. for the morning note. Have a great rest of your day. Cheers.